Hey there, Tim from Alpha Wolf Trading, wanting to thank you for stopping by to watch this interview and also make it clear to you that this is not a paid-for promotion. I collect no compensation for the interviews I do here. These companies have been identified as opportunities for investment that could provide an above average return on our investment. This is our opportunity to get to know management, to understand the vision for the company, the strategy they plan to implement, and execute to achieve that vision for the company. So if you learn anything here today and you enjoyed the interview, please do us a favor and subscribe to the Alpha Wolf Trading YouTube channel. Hey everybody, Tim from Alpha Wolf Trading coming at you with another CEO interview, and this one is very interesting. And I will tell you right off the cuff that typically I will not do this type of industry play because I've had really no success in this industry for my entire trading career. But I think this has got a different feel. I think there is a person, Brian here, that knows what he's doing, and I have a good feel for who he is as an individual. So that is why we're doing this interview today. So this is Brian Ostroff from Arianne Phosphate. Now I do have to ask you, Brian, the symbol what is it? DRRSF. What is up with that?
So we were originally listed in Canada,
Okay.
under the ticker DAN, which is still where we're listed. The origins of this company, it is in Quebec, and it, was when it first listed French, Resource d'Arianne, which got you the DAN. In terms of the DRRSF, that's what the OTC gave us. The F shows that we are foreign listed.
Yeah.
And quite honestly, geez, if all these questions are going to be this tough, this interview, I'm going to have trouble because I just don't have a good answer for you on this one.
All right. So listen, the name of the company is Arianne Phosphate, right? And what's unique about this story is it's shovel ready, right?
Yes, sir.
And we're going to talk about phosphate and why there could be a really interesting inflection point for the company and for the, I guess what is that, a mineral? Right?
Yeah, I'd almost argue, and we'll go through it as we speak, not so much an inflection point in terms of going from down to up, but I'd almost look at it more as an accelerant, because, generally it does go up because we always need it. But there's some things out there in the horizon that could really accelerate the rate at which it goes up.
Which you only have so much supply, and if you only have so much supply, what happens next? You get an increase in price, right?
Yes, sir.
All a function of supply and demand. So real quickly, what I'd like you to do is tell me how you wound up with Arianne, right? Give me a little background on you.
Well, because of the ticker symbol, I thought it was compelling.
That makes sense. It would have drawn me.
Yeah, absolutely. No, so I wound up at Arianne. I'm pretty much a lifelong capital markets guy. I was with the M&A firm, amongst other roles, but always with a focus in the mining space.
Okay.
And so I was an early partner at a fund up here in Canada that the focus was early stage natural resource companies. And so we just came across Arianne many years ago, thought it was interesting. Like a lot of people, didn't know much about phosphate other than, hey, that's fertilizer, but really started to dig and understand. And, we made an investment. Personally, I made an investment, and it just kind of went from there. Ultimately, I wound up joining the board as the fund was a very large shareholder. And then as the company continued to progress, and we'll go through it, there seemed to be a need as the company morphed kind of from the geology engineering to really financing, how to move this thing forward. And at the time, the board believed that I would be a good addition on the management side.
And when did that happen?
That happened about mid-2016.
2016. Okay.
Yeah.
So it's been a long road.
It certainly has, but every long journey begins with that first step.
That's true. What's interesting though is that the potash market was in a decline for like 7 years, right?
As was phosphate and nitrogen. The agricultural commodities, they run really long cycles. Certainly longer cycles than I think most investors in other commodities or markets or what have you. Arguably, maybe the interest rate cycle could be pretty long. Although if the Fed keeps doing its thing, this one's going to be pretty short because they're going to have to reverse and start opening up the spigots again. But, getting back to ag and ag inputs like fertilizers, yes, they do run long cycles. The last agricultural cycle, fertilizer cycle, topped in 2012. It bottomed, towards the end of 2019. It was really kind of mid 2020 when prices started to move up. They've moved up pretty rapidly, and we can get into some of the things that acted as accelerants. But look, prices were going to move up. We're really only 2 years into this next bull cycle. Historically, it really should last longer. I just think there's more to come.
Right. And so just so we're clear, it's used in ag as a to increase yield, right?
Yep.
For the crops.
Yep.
It's always going to be needed, right?
Unless we figure out how to not eat, then yeah, we're pretty much gonna need that. Yeah, absolutely.
Okay.
And that's important, really. First of all, there are 3 components to fertilizer. So there's phosphate, of course, and there's nitrogen, and there's potash. And in terms of pricing, look, they will trend together, but I think your viewers need to understand that it really is 3 separate commodities. And they're in the same family, but they really do have their own supply-demand dynamics, and there are going to be different aspects that are going to affect the supply-demand of each of those 3. I'd argue that I think phosphate is probably the most compelling of the 3. There's quite a bit of potash, and that potash really does come from a lot of it comes from good places in the world. Nitrogen, your input is really just natural gas, so it's more a matter of permitting. And then there's phosphate. Now, phosphate, I think, is completely different because most of the world's actually short phosphate. So
one of the biggest suppliers for phosphate was it Morocco?
Yeah. So, and that's when you talk about the phosphate concentrate. So, phosphate gets mined, you produce a phosphate concentrate, and then that phosphate concentrate gets turned into end products. So mostly fertilizer. 85% of the world's mined phosphate winds up in fertilizer. So that's MAP and DAP. And then depending, phosphate will differ from mine to mine in its quality, but there are definitely uses of better grades of phosphate. So it's actually used in foods as a preservative. It's used in animal feeds. It's used in consumer applications like detergent, cosmetics. One area which I imagine we'll touch on in a little bit is now it's starting to get a little bit of torque in the industrial space, things like LFP batteries. And you know what? There's another differing factor vis-a-vis, say, potash and nitrogen. Potash is used for agriculture. There it is. And look, it's a great market. The ag market, it grows every year, 1.5%, 2% every year. It doesn't matter if the economy is good or bad or what the
And that's because people have to eat.
It grows. And
Right.
so, that's fine. But now all of a sudden, where phosphate maybe becomes different than potash, for example, is there's another use for phosphate.
And it's a
And
big one.
that's the batteries. And I think that if you take a look at demand curves and what people are saying, that can be pretty significant. So
Let me pause you for there just 1 second. So I have a friend, and you actually met that friend. He's a pretty smart guy when it comes to chemical makeups, and I wanted that friend to have a conversation with you, which we did. And this is a very, very smart man. And I asked him, what's the difference? Because he happens to be in an industry where they use electric motors. And I asked him, what's the difference between the lithium ion this and the lithium ion phosphate? And he told me straight out. He said, I use the phosphates in my trucks for hauling. And he explained to me that the one lithium that is in cars, or battery that is in cars and his boat motors, is that it's torque. You get torque out of those batteries, but with the phosphate, it is duration, right? And storage.
yeah.
And I can think of two very massive opportunities for storage batteries, right? And then, of course, if you're going to do long haul trucking, that would be, I would think, the preferred battery of choice, because you don't need the torque.
Yeah. So, a couple of things. Yeah, look, the LFP battery in the automotive or transport, it's definitely grown. And that's really because a few years ago, there have been some changes in the technology. So it does address things like you said. It used to be that the duration of the charge that you could have that you could get out of the LFP was really pretty small. And that has progressively gotten better, 300, 400, maybe 500 kilometers. You get more charging cycles out of an LFP battery. Look, it doesn't go boom, which is really
It
a
doesn't
good thing.
blow up,
You
catch
get
fire,
people
because
in
it
your
doesn't get
car.
heated, right?
Yeah, right,
Right.
exactly. I mean, I don't know if you remember, it was quite a few years ago, but there was a time when you couldn't bring a Samsung phone onto an airplane because they had a combustion problem. So LFPs are incredibly safe. And then when you look at some of the other chemistries out there, they require nickel, cobalt, manganese. They're more expensive, they're harder to get. If you're concerned about the environment, which in theory, if you're looking at electric vehicles, maybe you are concerned about, the environment. It's not wonderful to mine them, and comes from not wonderful worlds. I mean, when you're talking about cobalt, you're talking about the Congo.
Right.
So, that's definitely an issue. Now, along comes the LFP. You're talking about commodities, iron and phosphate, which are at least easier to source. We'll come to the phosphate in a moment, but generally easier to source. The other thing that's interesting actually about the LFP battery, look, lithium prices have gone like straight
Sky
up.
high.
You know, the LFP battery actually requires less lithium than some of these other chemistries. So as lithium prices continue to move higher, there continues to be a bit more of an economic incentive to look at some of these other
Alternatives.
chemistries.
Right.
And so that helps the LFP. Now, you know, to your point, to your friend's point, depending your application, yeah, LFP is not your answer. Like if you have a sports car and you want to go 0 to 60 in 2 seconds, it is not LFP.
Right.
The other thing I'd like to touch on, which you know you brought up and you're well aware, but a lot of people just aren't as aware. So if they do know of the LFP battery, they probably know of it in regards to the automotive. You know, it's sexy. Tesla and you know Volkswagen and Ford and Hyundai, and they're all chasing down the LFP, and that's great, and that's making great headlines. But there's the energy storage market. You know, it's the stationary market. It's when you're not connected to the grid and your power comes from the solar panels on your roof. You know, that's great. You're collecting this energy, but you need to store it. And so the LFP, actually, I've seen numbers that by the end of this decade, you're going to have more LFPs actually in the energy storage business than you will in the automotive business. And that's huge, right? That's just
that is
monstrous.
Yes, that's a good word, monstrous. I mean, the vehicles, I get it, right? And that's not what I'm looking at. I'm looking at if we really want to go to 100% renewable, you know, some of these politicians say 2035, not a chance in hell that's happening. 2050, you're going to need a lot of energy storage. I mean, a boatload of energy. And I'm talking I'm talking for data centers. There is going to be a massive need for storage. Yes. And if this is one of the better vehicles out there for storage, then that says to me, demand is going to increase. Demand increases for something like that, of that size and magnitude. What's it going to do to the price of phosphate? Because if I'm not mistaken, correct me if I'm wrong, but majority of the phosphate global supply comes from China.
Yeah. Okay. So, and I didn't do a great job of answering your earlier questions. So, you know, when it comes to phosphate, most of the world doesn't have enough. So here in North America, we run a deficit along with South America and Western Europe and large areas of Asia. India today is the world's largest importer. So where do we get that from? And again, that's the short without, we've talked about demand grows every single year. So we're short and getting shorter. So how do we cover that short? And it's basically the Middle East and North Africa when you're talking about the phosphate concentrate, the ingredient. So Morocco is by far the world's largest. Tunisia used to be number 2. Arab Spring took care of that. Syria used to be a producer. Look, you know, we need to recognize something, particularly if we want to be North American centric. You know, we got great cornfields in Iowa, and we've got great wheat and canola fields in Saskatchewan, but you know, they're not going to be great for very long if all of a sudden, for whatever reason, we can't get that phosphate. Now, your comment about China, that's very accurate, because what happens is that phosphate concentrate, you know, which looks like a sand, it gets mined and processed, then gets turned into something. As we talked about, mostly it gets turned into fertilizer. So China is actually a major exporter of phosphate fertilizers, MAP and DAP. In fact, they represent about 30% of the traded market in MAP and DAP. And so, a funny thing happened about a year ago. The Chinese said, yeah, this is great, we're out. Right now we're not going to be exporting any. And look, that's 30% of the market, right? Oops. And so, today they're back periodically in the spot market, but they've definitely reduced. There are some interesting theories around why that happened. At the time, it was a belief that, with fertilizer prices moving up the way they had, by not exporting, they would keep their domestic market better supplied and slow the price increase. A few months later, what it actually seemed to have been, and most industry watchers now believe this, is really the LFP battery. So they really started repositioning a bunch of their phosphate supplies to factories that are being set up for these LFPs. So, we need to recognize right now that over 90% of the LFP production is actually in China. So, you've got that. Then also back to the fertilizer side, your other factor here is Russia. Russia is about 10% of the phosphate, phosphate fertilizer market. So, you've got real issues, and in case anyone's been living under a rock for the last 6, 7, 8 months, things aren't particularly great with Russia either. So, at the end of the day, you're talking about a very, very essential commodity. No phosphate, no fertilizer, no food. We are not in control of our own destiny. And
when you say we are not in control of our own destiny, who are you referring to?
We, certainly the Western world, but a lot of the world, like I said, we're all kind of short. And so whether your destiny is you want food or you want to pursue decarbonization, there's definitely some challenges. And
so, I want to tell you an interesting statistic that I read last week about new mines in the United States and how long it takes to get a permit. The average length of time to get set to open a mine is 17 years. 17 years.
Yeah.
Okay.
I know.
When you talk about politics, we want to go 100% renewable by 2035, right? We're demonizing the oil and gas companies. Nobody has a plan. Nobody has a plan. I think they want to keep Americans dumb and divided so that they don't focus on real important issues like this one. Because you would think that we would have learned from oil and gas that you probably don't want to be reliant upon foreign entities that don't like you very much for your energy. And yet we're moving towards this 100% electric renewables, or not, no more gas motor vehicles. We're going to go all electric. And the guys that own 85% of the global supply for batteries is China. 85%. If that doesn't scare the shit out of you, you are clueless. Because what happens when we are, everybody's driving an electric vehicle and you can't get batteries?
Well, I mean, that's just it, right? Because if you think about it, if 10 years from now, 90% of the cars are electric and 90% of those cars use LFPs and 90% of those batteries come from China, do you think it's Tesla, Ford, or Volkswagen that own the auto market, it's China. And so,
And
at
the
the end of
storage
the day,
market, right? And the storage market. I mean, look, this is such a massive, I think about this, it scares the shit out of me. And then when I read a statistic that it takes 17 years to get a mine up and running, if we're not thinking about that right now, if we're not making moves right now, today, right, things are going to get really, really not good, right?
yeah. So, I mean, and case in point, and during the introduction, you had mentioned this in terms of Arianne. We are fully permitted, we are shovel ready. We need a couple more things to fall in place for us to actually.
And what are those things, Brian? So let's talk about, first of all, let's just hop right into it. I mean, let's talk about what Arianne has, right?
Okay. So today, what Arianne has is the world's single largest greenfield phosphate deposit. We make the purest concentrate, which I want to come back to, and we're in Canada. So we've touched earlier on kind of the whole security of supply thing.
Yep.
Yeah. Look where most of the stuff comes from, and yet Arianne is in Canada, the province of Quebec. We're not particularly far in the north, in the province of Quebec. The infrastructure is by and large there. People, go to the strategically located. There you go. So, so not only are we well located in Canada, being in Canada, security of supply, but where in Canada, we're close to infrastructure. And I want to highlight this because even in terms of decarbonization, we're 30 kilometers away from a hydroelectric dam. And we've got our power commitment for our life of mine. And that's renewable, green, and relatively speaking, inexpensive. And so there it is. We've got that. The oversized haul road's already there. We don't have to cut a couple of 100 kilometers worth of trees. The road is there. It's been there for decades. It gets us down to a good waterway, and we can ship. So I should also mention 75% of our entire power requirements, from blast to loaded on a ship, that's renewable energy. So, there is, you're right, there's this balancing act, right? We need the mines, we want to be environmentally friendly. Does something have to give? Well, no, not in the case of Arianne. It doesn't give. We can be environmentally friendly and produce something that we need. So, we've got that. We make a very pure phosphate concentrate. So I'm not going to bore the stink out of everyone watching this, talking much in the way of geology, but most of the world's phosphate, over 90%, comes from sedimentary deposits. And, just your challenge there is there's a lot of deleterious elements in them.
Right.
Radioactive elements, heavy metals, that's not wonderful when you're talking food. And if you're talking specialty applications, that's not wonderful either. Now, there are these rare deposits. They're igneous. There's maybe a dozen in the world. That's what Arianne has. No issues with radioactive elements. No issue with heavy metals. We make an extremely pure concentrate, arguably the purest. There it is. That's if I could only have one slide to show someone, that would be it. That green dot represents our level of purity. That blue, that's the size. And again, being in Quebec, I'd argue, we're certainly amongst the safest jurisdictions. Now, the fact that our phosphate is so pure, that is what allows us to go beyond the world of fertilizer and into, some of these newer applications like batteries.
And you're not saying that just off the cuff, because you actually had it tested by an independent, right?
Yeah. So, look, I guess about a year and a half ago, we were, in fact, approached by a couple of battery guys. to talk a little bit about our phosphate and batteries. And, we had done a bunch of work, and yeah, it was, I guess, a little less than a year ago. They gave us our spec sheets, and they said, go have this made independently, meet these specs, and we can have further conversation. So yeah, to your point, it was late June, so whatever, 4 months ago, that we announced that in fact our phosphate does make a more than suitable battery grade phosphoric acid, and that this is going to work very well in the LFPs. Now, look, to be clear, you don't necessarily need an Arianne type of phosphate, but every lower quality of phosphate, the more you're relying on the technology of the phosphoric acid producer to, basically take shit and make it worth gold. And so, there are a lot of different ranges down, and we're definitely the gold. But there's still a lot of phosphate that it doesn't matter how much magic, it's not enough magic to make it happen. So look, we're really in a good place.
So what that does with the purity that you have with that study being done is it opens up discussion to, battery manufacturers that are looking to secure supply for the future, right? They're looking ahead.
Absolutely. Look, I have to say that generally the battery guys, the automotive guys, I think they really do have a bit more of a focus on thinking of the future as well. These disruptions, I have to say that they're taking it a little bit more seriously as well. And then the last thing, we've definitely seen some legislation come out that really does provide financial incentives for the car companies to with materials that were sourced from either the United States or countries that are very friendly, have a free trade agreement with the United States. And so aside from just plain old security of supply concerns, there are now financial reasons to try and get your stuff from a friendly place.
Friendlier sources.
Yes, absolutely. And that's some legislation. There's also some legislation that has come up, that the Defense Procurement Act, DPA. The Department of Defense has been given a decent amount of money also to try and stimulate projects that can provide critical materials to the United States. And in the case of DPA, Title III, that specifically is the United States or Canada. So there's a lot of reasons why a whole lot of companies are going to look to source their critical materials from friendlier places in the world.
So let me ask you this: 2016, 2022.
Mm-hmm.
You don't have a production facility. You don't have a working mine yet.
Correct.
You have it permitted. You have it shovel ready.
Correct.
Why are we not? Why is that where we're at?
So there is this really smart guy I heard, and he said something like it takes 17 years to, I don't remember where I heard that from exactly, but
he's pretty smart though. I heard.
Yeah, it's definitely wise and accurate. No, all kidding aside. So, you really had a couple of factors. First of all, although, I came in 2016, we had just received our permit. That didn't make us shovel ready in the sense that, yeah, we could stick a shovel in the ground. Like we were permitted to stick a shovel in the ground, but there's still work that needs to be done from you can stick a shovel into the ground to you are going to stick a shovel in the ground. So you got to do further engineering. We did optimize our mine plan. We were able to take costs out. We changed our transportation route. So I would say, in the true sense of shovel ready, you're talking mid 2018. It was in kind of fourth quarter of 2018 that the Port of Saguenay had received their permit, because we need a new loading facility built at the port to ship our stuff out. So it was really at that period of time that we were ready. So at that period of time, you were 6 years into a bear market in phosphate. No one was really caring. The guys who needed it, they kind of weren't in any rush, because the price kept dropping and it was just better to buy in the spot market. Short term, they were right. Maybe now not quite as much. And then all of a sudden, the prices turned. And look, what we need, we talked about, we need to put a couple of other things in place to, make this happen. The biggest thing being offtake. So some commodities like gold or copper, they trade on an exchange. And so if I'm building a gold mine, I will always have a customer for my gold that I'm going to pull out of the ground. I can always sell forward into the London Metals Exchange or the COMEX. But most commodities actually do not trade that way. They trade contract between buyer and seller, an offtake contract. And phosphate, like many of those commodities, you need offtakes. So the banks are, very much like this project, willing to finance. What they need to see is that we've entered into these offtake agreements. So back to, we're kind of ready to go late 2018. Now we need customers. 6 years into a bear market, not wonderful, although we did sign a couple. COVID pretty much took care of, late 2019 through 2020. You're not having trips to China and India and what have you to secure some of the deals that you need to do. But then things have started to get really active. Prices are up, conversations are ongoing. And lastly, of course, the economics. Back at the end of 2019, look, we would still be profitable. Arianne is going to be amongst the lowest cash cost producers of phosphate on the planet per nutrient value. So even at the depths of 2019, in production, we'd still be decently profitable. But we are a $1.2 billion CapEx. And even if you're going to make, at that point, $100 or $125 million a year, that's nice money in operation. But to make that original investment on the 1.2, not really. But now that's changed a lot as well. Today in production, we're earning 500, 600, 650 million a year. And that makes the financiers that have to step up, I think, in a much better mood. And so really, I'm pretty hopeful that over the next year or so, we can tie down what needs to be done.
So when you're talking about that, you're talking about securing the financing, because to build your facility, build the mine, get it to where it's producing and creating revenue, that's going to cost what? $1 billion?
No, it's
800 million?
About 1.2. Our numbers that have been published show a hair over 1.2.
1.2
billion.
Okay, that's a big nut. That's a big nut, right?
It is, but I will definitely on the other side say, today in production, we would do revenues of close to, I don't know, $900 million a year, gross profits of,
and that's
$650 million a year.
how much tonnage are we putting out at 9 million? What are you putting out?
So it's the mine will produce 3 million tons a year of finished high purity phosphate concentrate, which today, granted it's had a nice move up, but it's $300 a ton.
$300 a ton. Okay.
Yeah.
So let me ask you this: the duration, you said, we talked about this at the beginning. The duration of the cycles are long, right? We're 2 years in.
Yeah, two and a quarter. Yeah.
2 and a quarter.
Yeah.
So if you started today, if you got the financing today, how long is it going to take?
2 years.
To build it?
2 years.
2 years.
A little over 2 years.
Before you start producing any revenue?
Correct.
So it's 2 years, and that's if you do it today, right?
Yes, sir.
The longer you wait, right, the further you are into the cycle, right?
Agreed, but I'm going to throw out something, and as I said earlier, I come from the capital markets, and so if someone's started with this line with me, I'd probably hang up on them. So I'll ask you to let me finish my thesis before you hang up on me.
Go for it.
I might argue that, please don't shoot me, this time it might be different. I'm sorry, man. I'm sorry. But let me run with this a little bit. Give me a bit more rope to hang myself with.
Okay.
So you do have these cycles. They do last long, but every cycle previously, that was really phosphate with regards to agriculture, right? And so even with those are cycles in price, but demand always grew at 1.5 to 2% a year. In fact, one of the reasons why I'd say we have had a pretty sharp move is because for 7 years, the price went down. It's the old story, the cure to a low commodity price, a low commodity price. So for 7 years, no one deals with supply. Demand grows every single year. You reach that inflection point, and that starts to happen. Only this time you have the LFP. Okay, so now,
and that's why this time could be different.
Could be different.
Right.
Yes. But I think what that does is your demand curve, rather than growing at 1.5 to 2%, it really depends, because the industry is relatively new and it's hard to really zero in on a number. But, I think you could easily be looking at demand going to 4 to 5%. Now, I think everyone understands that 2% on 2% on 2% gets you to a certain number, but 5 on 5 on 5, you're looking at something completely different. And if you need to worry about finding higher purity phosphate, it's not 5% anymore, right? Because let's say half of that phosphate doesn't even work for batteries. It's not 5. It was 5 on the $200 million market, 200 million ton market. But that's just not the case anymore. And you know what? Security of supply, all of these things, I'm not saying that prices are going to $1 million a ton, but what I'm saying is I think you have a buffer, and I think you definitely have a long cycle, of which you are only 2 years into it. Great, we get this thing built in 2.5 years. You're 4.5, 5 years into the cycle. I think once this guy is up and running, he's going to be up and running until he runs out.
So let me ask you, so you're looking at, what do you have in the bank right now?
We have, as of our last financials, we're about 3.5-ish million in cash.
In cash. Okay. You got no burn right now, right?
Minimal.
So, but what you're looking at doing is you're looking at, so I would assume, I'm going to assume that you're right now looking for partners, right? Essentially, that are going to finance this thing. And that could be anybody. I mean, that could be anybody. That could be a battery manufacturer. That could be
a fertilizer
right?
company. It could be, you know, the numbers are pretty compelling, a large private equity fund. You know, we didn't touch much on this, but Arianne is 6% owned by the government of Quebec. You know, they've definitely indicated a willingness to help this thing happen. We've talked a little bit about recent US legislation where money might be available to make some of these important projects happen. So,
What's
yeah,
interesting about what you've done is through that down cycle of 6 years, 7 years, you guys didn't go away. You kept moving forward to get to the place where you get the position that you're in now, right?
yeah, yeah,
Where a lot of other companies just went away.
yes. Or
Right.
at the very least, they mothballed, you know, and they're only starting to wake up now with the higher prices. But yeah, they don't have permits. They don't. 17 years, right?
Right. So you've positioned yourself from a timing stand. Do those permits expire at all? I mean, do you have to get something going before X date before you have to reapply or something?
Yeah, well, you can extend. So we are good for without extending. We are good still for another 3.5, 4 years.
Okay. What do you think? What do you, and you know, if you can't tell me, you'd have to kill me kind of thing. That's fine.
Well, I'm certainly not going to kill you on film. I wouldn't be able to have much of a defense other than maybe insanity.
what do you foresee as being the catalyst for you guys over the next 6 to 12 months? What for you to feel like, you know, we're really on our way, right? What do you
Yeah.
need to see? What needs to happen?
I think that conversations that we are currently in are, you know, just need to come to fruition. And so that's off takes, and those off takes can come from either battery guys or fertilizer guys. So there are those conversations. There's definitely some conversations around, you know, people maybe taking a look at taking part of the project because it just plain might make sense. So those conversations are ongoing right now. Look, here's what I would say.
Being acquired. I mean, is that possibility, right?
Oh, it's absolutely a possibility. You know, 85% of the world's phosphate mine production is owned by guys who make the downstream product. There's not a whole lot of guys out there that just, you know, have that phosphate concentrate to sell to the people that need it. So look, it's definitely well within the realm of possibility. So, you know, I'd say that really when you say what needs to be done is the conversations that are currently ongoing just make their way through to
Somebody's got to step up and you know, close the deal.
And so look, you know, it's interesting because you had touched on this earlier. You know, price goes down, no one cares. A whole lot of other projects got mothballed. Arianne was really the only large scale, you know, development, certainly in the Western world, that was able to move forward. You know, the funny thing is, and it's in our deck if any of your viewers want to go, but maybe if you want to scroll down, I've got a history of market cap. Keep going a little bit. Okay, great. Okay, yeah, great. Show those two. So, you know, back in 2012, when we were really kind of starting to go, that was the last time people cared about, you know, phosphate, fertilizers, etc. And there were other projects out there, as you touched on. You know, we had $160 million market cap at the time. We had analyst coverage. 5 firms covered us. They knew who we were, but we were really early days. And then at the end of 2012, you know, the fertilizer market rolls over and nobody cares, and analysts get fired and money managers move their money elsewhere. And, you know, the old story of a tree falls in the forest, but there's no one there to hear it. It doesn't make a sound. So our project gets better and better. We're one of the few survivors, and permits and offtakes and First Nations agreements, but fewer and fewer people are watching or care. And, you know, as you can see, you know, our market cap just continues to decline until, you know, maybe about a year ago, a little bit more, as people recognize, oh, wow, you know, phosphate starting to go and what have you. It's like, how can I invest in that? And there really weren't many choices. You could go into the big guys like the Nutrients or Mosaics or Israel Chemicals, but they're not pure plays, you know, or there's little old Arianne that survived. And again, look at everything we were able to do while our market cap went from 160 million to like 30 million. So today, even with everything shovel ready and now the added sex appeal of critical materials, we have an $80 million market cap. Our market cap has to double to get back to where we were when we weren't anything. And so, you know, someone needs to explain that to me. And you know, while I'm piling on, I'm just going to add in one other thing, if I may.
Go ahead.
So we have talked about some of these other critical materials. And look, I do believe that batteries, decarbonization, you know, like you, is everything by 2035? No way. But is there going to be continued growing demand? Absolutely. So I buy into the thesis. I'm having a little trouble buying into some of the valuations, however. So, you know, I can show you a bunch of lithium companies that have billion-dollar market caps that, you know what, they have maybe a resource calculation, maybe. They don't have economics, they don't have metallurgy, they don't have offtakes, they don't have permits, they ain't got nothing. But they have $1 billion market cap. Okay, I get it, lithium demand, all of that, it'll come 5 years after Arianne. And, you know, I understand the lithium iron phosphate battery, you need lithium or there's no LFP. Guess
Right.
what? No phosphate, no LFP either. and so, you know, if people look, moving away from the corporate side and putting my market hat on, I think if investors start to recognize that phosphate 2 is a battery material, and it just started to get even a teensy beansy of that recognition, what are we worth? And by the way, you have all the downside protection of, even if the battery technology changes, I'm still going to eat. I still have organic growth of 1.5% to 2%.
A growing population, right? As far as I know.
Population change in diet that requires more protein, which requires more grains to feed those. You know, what's a chicken? A chicken is corn with feathers on it. You need more corn if you want more chicken. And so
you know, there's going to be some animal rights. I'm telling you right now, man, you can't be calling a chicken corn with feathers on it, right? That's some kind of discrimination. And
let's just call it a little corny. Anyways,
so listen, how many shares fully diluted outstanding are you guys sitting on?
Okay, so fully diluted, we're 240. But, you know, close to 40 million of those so we're roughly 190 million basic.
Okay.
And we're about 240 fully diluted.
240
Okay,
fully
so
diluted.
you've got, what is that, about 50 million options and warrants. A lot of those warrants are subject to a warrant blocker because there is a major investor in the company that does have a fair amount of warrants, but they can never exercise enough warrants to go through 19.9%. But be that as it may, look, we are 240. There you go.
So my concern would be, and you know this, is if there's need for capital raise. I hate bloated share counts, right? I mean, overly bloated share counts. It's because it just loses shit out of the shareholder, right? Especially the early shareholders, right?
Question.
That's a painful thing to go through, right? And that's what makes it difficult to want to put your money in something that you're early on, right? And look, if you would have put your money in this thing in 2016, anticipating that there was going to be a mine up and running and you were going to be revenue, you'd be pretty disappointed in 2022, right?
You would be.
Right.
I guess I'd counter that with, right now we have, like I said, over 3.5 million in the bank. Our burn's relatively low. So I don't think anyone has to be too concerned about major financing coming in their face. Our hope is to basically get through to the construction financing before we have to raise money. Now, most single asset development companies, when they announce that their financing's in place and the projects to go, usually trade up to 1x first year's EBITDA. So you would get a pretty substantial lift before you have to do kind of that next sizable equity raise. That's, of course, on the assumption that someone hasn't come in and partnered with you to provide you that equity in the first place. And, I mean, look,
and that ultimately, I mean, look, what is going to determine whether this turns out to be a phenomenal investment or a mediocre one is the terms that you get, that you wind up setting, the negotiation that the partner that you bring to the dance is really going to be what seals the deal, right? It's either going to be a good deal or it's going to be a bad deal.
Yeah, but I'd argue that a sub, or US dollars, a sub $60 million US market cap, like I think even a bad deal and we're going up substantially, right? So that's a bad deal. I used to work with the guy and his comment was, you really can't get hurt falling out of the basement. And look, this is a project that has taken a fair amount of time. Thank you for rubbing that in. But we've spent like $100 million. Anyone else who wants to, if they have the good fortune.
Let's talk about that. If they want to start this process today, what's it going to cost them to get where you're at right now?
More than we spent, because things are more expensive. And if you're in a good jurisdiction, permitting's a heck of a lot harder. There's no guarantee at the end of the day that even if everything else goes right, that you get your permits. Right. So, we need what, a 66% bump just to get back to our replacement cost, never mind time value of money. And as this astute person said, if you're starting today, you're probably looking at 17 years.
Unless there's some radical changes in the way, those permitting processes are run. And that's what our politicians should be working on.
But you know what? And the permitting process is a lengthy and expensive one, but just even the process of drilling, getting your resource definition, metallurgy, engineering, economics, that's many, many, many years before you even start to think about, you're not going to pursue a permit unless you have something worth permitting. Right. So, you're going to be years before you even get to that point in
And
time.
let's go back to the, ESG, or is it ESG? Didn't
Yeah.
exist
Yeah.
10 years ago, right? But now, and the point is, you pointed out at the beginning of this, hydroelectric, right? Transportation, you got it all figured out, mapped out, right? You're ESG friendly.
Yes, sir.
So that's another big component, man. What's that worth to the valuation?
In this day and age, it's worth quite a bit. There are funds out there that specifically, you don't think some of these fund managers at ESG funds sit there and say, boy, I'd love to somehow figure out how I can get into the natural resource space. There you go.
Look, Brian, I love the fact that you did come from the capital markets, right? Because I don't think you're a dumb guy. So I don't think you're going to take a dumb deal. That's just my off the cuff impression.
Yeah, and you know what? Just because I know we've been dragging on a bit here, but that's really a good point, because inevitably one of the questions I often get is, well, this is why so long, and if this thing is as good as you say and what have you, how come a deal hasn't been done yet? And my answer back is, look, do you want a deal done quickly, or do you want a deal done well? If I were to grab the first thing that had come along, we'd have had a deal a while ago. But in the meantime, prices continue to help. The macro helps. The LFP helps. I owe it to shareholders, of which, by the way, I personally am a large shareholder, to really look to do the best deal that we can do.
And I think that as time moves forward, positioned as you are, and if things continue to go the path that they're going, that just that gives you leverage, I would suggest, right?
Yeah, look, certainly, again, there's not a lot of projects out there like this that are pretty much shovel ready. Demand is growing, applications are growing. Look, there's no guarantees in life, but I certainly like the hand that we're holding right now.
And I agree with it. All right, listen, I know you got a hard stop. What I'd like to do is, as things continue to develop for you, you just hired a CFO.
Yeah, yes, we did.
Right.
She's well versed with the company. She actually came from PwC. And she was the part of the team that was the auditor of Arianne. So nice fluid transition.
Okay. And it looks to me like you're starting to get picked up from other places. I'm starting to see you're getting some buzz, right?
Yeah, we're getting some buzz. Again, the food thing, food insecurity, food inflation, was a plus. I think that from a buzz point of view, people starting to understand that phosphate is more than fertilizer, is going to, again, if we got 1/10 the valuation of some of these other critical materials, like,
here's what I want to show everybody. This is important. Okay. This is the chart from 2010 to now.
Mhm.
For 2011, I mean, you had a big spike up 2011, and then from there it's just been a downhill roller coaster, right? But here's where you had a very interesting thing happen. Now, long-term trends are your most dominant trend, right? Because of the duration of time. That trend was broken in the beginning of 2021. Now, that indicates that this could be the beginning of a new long-term trend, right? And at this time, instead of going from the left to the right, lower, we're going from the left, or no, wait.
Yeah.
Yeah, we're actually on an incline instead of a
Yes, sir.
decline, right? We've broken that momentum of decline, and that's big. I mean, that's big. When you break a long-term trend, it's big. And if you look at that, you didn't just break it on what we would consider low volume. You did it on big volume. I mean, if you just look back, the volume was minimal. And then all of a sudden over here, this is where we're starting to get some big volume, right?
Yep. We're definitely starting to be known. Look, the stock has backed off a bit. The markets haven't been great. The juniors haven't been great. We're also kind of coming into a time where juniors are sometimes vulnerable because of tax loss selling. But, you know, I would take the other side of the trade. There's some liquidity out there, and
look, you've got to look at this as a long-term play. Number one, I'm not telling anybody to buy the stock today. It's not what I do. What I'm doing is laying out the facts of where the company is at, introducing you to the guy that's got the vision and the strategy, right? And as from what I can see, Brian, you're executing as well, right? So now I look at where you're at. There are different levels of support and resistance, right? You're coming up right. You just right now, you're kind of at the 200-day moving average, or is that the 200-week moving average? But there's a pretty good floor or pretty good area of support around 25 cents, right? Where it was acting as resistance. You broke through that. This is the way I view it. Am I telling anybody to go all in? No. Do I think this could be an interesting spot to take a starter position? Absolutely. Right. I also think that you want to sign up for their investor email alerts, which is over here, right above my head.
Yep.
Right. Go to Arianne. Look, if you don't want to get involved and buy the stock today, that's fine. But I would recommend putting this thing on your radar, right? Put it on your watch list. Sign up for their email alerts every time they have a press release or an SEC filing. You're going to get it sent directly to your email, right?
Absolutely.
And then I'm sure, Brian, if anybody's got any questions, concerns, they want to know more, they can always reach out to you, right?
Absolutely. You can either email into the company and it'll get directed to me, or, you know, you can find me. You can find me on LinkedIn, or, you know, our press releases at the bottom. So you can find me. So
okay.
Kim, I want to really thank you for the time and the interest. It is appreciated. You know, this is, as you point out, been a long road, and I think we're in a pretty good spot. So I appreciate the time.
You got it, man. All right, look, I'm going to turn off the recording on this, but what I do want to do is I want to have you back when you got some developments, right? We'll do a follow-up. Okay.
Super. Appreciate it. Take care.
Hey there, all you stock market junkies. Thanks for tuning in to another CEO interview here at Alpha Wolf Trading. Today we had Arianne Phosphate, President and Director, Brian Ostroff. Ticker symbol DRRSF. I hope you enjoyed today's interview, and if you did, do us a favor, give us a like. How about giving us a share? And while you're at it, why not give us a follow? Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.